some interesting new numbers in terms of foot traffic at U.S. malls and outdoor outlet shopping centers. In the latter case, traffic returning to pre-pandemic levels. And for more on that, I want to bring on our next guest here. Chris Hudgins is S&P Global Market Intelligence data journalist, and he joins us now with an interesting take. Chris, I wouldn't have expected foot traffic at some of those outdoor outlets to return to pre-pandemic levels, but that's what you're seeing?
Yeah, so kind of what we did is we looked at data with AirSage, which uses actually GPS and other location devices to track foot traffic. And then we tied that to the publicly traded REITs and then looked at both outdoor outlet centers as well as the enclosed malls. So kind of what we've seen is obviously at the height of the pandemic in March and April, we saw foot traffic plummet to near zero levels. As expected, most of those stores were closed down anyway. They couldn't have shoppers there. And then throughout May, June and July, we saw a steady trend as they start to approach the new, what we call 2019 levels, so year over year, what they were last year. So the latest data we had for that was through August 9th. And in that week, we saw foot traffic at malls down roughly 15% year over year, which is still not quite 2019 levels, but it's much closer than they were even a month ago. And then we saw foot traffic at outlet centers were actually slightly higher than they were a year ago. So kind of what we think the main difference there is these outlet centers are mostly outdoor open air environment, whereas an enclosed mall would be indoor shopping. We feel like kind of the data show that customers might be more comfortable in the more open air outdoor type environment for shopping than the enclosed malls.
Yeah, but even looking at the enclosed mall traffic there, I mean, are you surprised to see it, I guess, on a bit of a steady recovery track, since we've watched this on a bunch of different metrics? You can look at air travel too, kind of stalled out in what we saw in the return. And it all boils down to the same thing on how comfortable Americans feel returning to normal everyday life. So what's your take on maybe how that trajectory has come back steadily, even for enclosed malls?
Yeah, so it was pretty interesting to see. It was really a steady increase. You didn't see a whole lot of ups and downs. It was more slowly steady over time as it continues to increase. Personally, I thought we could see even like a die-off as we saw fear of a second case of it might have hit with another wave. But so far we haven't seen any of that. It's mostly a steady increase up. And like I said, we're only down 15%-ish year over year, which is pretty good, I'd say, considering.
Yeah, and I guess backing up and looking at all this, when we had originally discussed this phenomenon a couple months ago on the show with other data analysts, they were digging into the idea that drawing foot traffic, obviously for an enclosed mall versus an outlet shopping center versus just standalone stores, each one facing their own problems during the pandemic. I guess both of these groups would share the idea that if you're going there, your one trip, you'll be able to hit a bunch of different stores. What have you seen, I guess, comparing it to some of those standalone stores as well, since the risks, I guess, seem pretty comparable in terms of getting out of the home and shopping altogether?
So I haven't looked at foot traffic specifically to the standalone stores yet. I will say, though, from a share price perspective, the REITs that own the standalone shopping, we call them the net lease REITs, they have been doing better stock price wise than shopping centers or regional malls or outlet centers. So while I don't have any data on foot traffic to those places, it seems like the investor base seems to favor those that are a safer bet than some of these more shopping center places.
Yeah, but you're right to point out some of those stock moves here as well. When we look at Simon Property Group, one of the highlights in your report, still down about 53% on the year, though the recovery in foot traffic likely to be cheered by investors there. Chris Hudgins, appreciate you taking the time to chat.